consumer inflation in the United States is still way above the Fed's 2% target. Nevertheless, the stock market is looking forward to the completion of the Fed's monetary tightening, and the benchmark indexes are trying to retain optimism, but sentiment is dampened by the stubborn labor market. Besides, investors are cautious ahead of the season of corporate reports. The first ones will be available today. The session on Wednesday was successful for the stock market, while the US dollar was losing steam. The major stock indexes were gaining ground in confidence. All three indexes closed in the green yesterday. The Dow Jones grew by 0.25%. The Nasdaq showed the best performance, having climbed by 1.15%, and the S&P500 gained 0.74% to close at 4,472 points. The benchmark indexes extended their growth in the New York pre-market, and the S&P 500 is expected to trade in the intraday corridor between 4,470 and 4,510 points. The stock indexes developed a steady rally yesterday after the CPI report showed a slowdown in the US consumer inflation faster than expected. The annual CPI declined to the lowest rate in more than 2 years. The unexpected decline in a headline inflation in June assured global markets that the Fed cycle of rate hikes would reach its peak already this month. Despite rounding to 3% for official purposes, the annual increase in the United States CPI was actually 2.969%, indicating that the psychological threshold given the Fed's 2% target has been passed. Along with the unexpected retreat of a higher core inflation back below 5%, the data was a great boost to market optimism. The VIX index, a measure of Wall Street's fear, went down. Stocks of high-tech giants, which tend to be sensitive to higher interest rates, have given the S&P the biggest boost. The technology sector grew by 1.3%. The S&P Bank Index rose by 0.6% in anticipation of corporate reports by large banks. US chipmaker Broadcom has received EU antitrust approval for a $61 billion acquisition of a cloud computing company VMware after offering legal means to help competitor Marvell Technology. Shares of VMware jumped by 2.8%, Broadcom by 0.9% and Marvell by 1.2%. Nvidia shares climbed by 3.5% after it was reported that chipmaker SoftBank Group was in talks to bring in Nvidia as an anchor investor in ARM Ltd. as it pushes plans for the company's New York listing, which could happen in September. In addition, Nvidia said it will invest $50 million to accelerate the training of recursion AI models to create drugs. US stock futures rose again ahead of the opening bell after the S&P and Nasdaq hit the highest mark since April last year yesterday. Besides VIX index, the Wall Street Fear Index fell below 14 to its lowest level in a month. After the release of inflation data on Wednesday, today's economic data also reinforced disinflationary expectations. United States and US producer prices edged up by 0.1% on March in June from a 0.4% in May and were below the consensus for a bigger growth of 0.2%. The annual rate of factory January inflation also logged a 0.1% uptick, the smallest gain since the decline in 2020. At the same time, the labor market added a fly in the ointment on a Thursday. It proved itself traditionally stubborn, hot and steady. The number of first-time unemployment claims fell again last week to 237,000 instead of 250,000 in the consensus. The figure is 12,000 less than the previous one. Despite the disappointing result, the indexes continued to rise in a pre-market trading. Some analysts believe that the combination of a strong labor market, easing inflation and strong economic growth is a positive backdrop for a stock rally. The S&P 500 has been up 16.5% since the beginning of the year and is at its highest level since April 2022. This optimism can be tested in the coming days when top US companies provide reports for the second quarter. So far, the trailblazers are driving bullish sentiment. PepsiCo upgraded its full-year revenue guidance for the second time this year after the snacks and beverages giant beat a quarterly guidance strongly. Its shares rose by about 2% in the pre-market trading. PepsiCo said core gross profit increased by 130 basis points for the quarter, up from 96 basis points a year earlier, and this followed a 50 basis point gain in the first quarter. PepsiCo predicts organic revenue will expand by 10% in 2023 compared to the previous expectations of an 8% increase. Shares of Delta Airlines grew by 3.9% after the company raised its full-year earnings forecast after better-than-expected second-quarter earnings amid the post-pandemic travel boom. Other airlines, including American Airlines, United Airlines and Southwest Airlines, added between 2.2 and 2.7%. Shares of mega-cap stocks such as Apple and Alphabet gained 0.6% and 1.6%, respectively, in a pre-market trading. While Disney shares rose by 0.7% after conglomerate's board of directors extended CEO Robert Iger's contract by 2 years. Meta, which recently launched rival Twitter, Threads, outperformed major growth stocks, gaining 1.4%. According to the report, the company is about to the release of a commercial model of artificial intelligence. In addition to reports and the corporate sector, the market's attention today will be riveted to the speech of Christopher Waller and Mary Daly. Meanwhile, the US dollar is badly bruised by its rival currencies. The US dollar index is trading at 100.10, 0.4% lower than yesterday's closing price. The instrument is likely to trade in the intraday corridor between 99.80 and 101.40. Yesterday, the US dollar index tumbled to the weakest level since April last year. It's on a track to its sharpest weekly fall this year. Having evaluated the series of crucial data, traders believe that interest rates could top out this month. And this led to the dollar's biggest one-day sell-off in 5 months and left the US currency at its lowest level in a year against the euro and the pound sterling, and its lowest level in more than 8 years against the Swiss franc. Deutsche Bank said on Wednesday that after the inflation data, it was time to buy the euro. We predict the euro will trade at 1.15 against the greenback at the year end. As we stated earlier, we foresee a wider range of 1.15 and 1.20. The euro has not risen to $1.20 since the middle of 2021, and today the currency is posting its 6th-day gain, the longest period of gains against the dollar this year. Sterling rose by 0.8% to 1.3097 for its 6th day of gains, breaking above 1.30 for the first time since April last year. Data on Thursday showed that the UK economy contracted less than expected in May, supporting the idea that the Bank of England can afford to raise interest rates further. The yen, which appreciated by 4% over the past 5 days, remained stable against the dollar at 138.39. The Swiss franc has traded at its strongest level against the dollar since the Swiss National Bank unpicked the national currency in early 2015. Interest rate futures showed that markets have fully priced in another rate hike by the U.S. rate setting committee this month, but expectations of further increases have evaporated. Now, a lot depends on what we hear from the committee in a couple of weeks. If there is any hint of the dovish shift in a rhetoric, then the dollar bears will take advantage of this. Hence, the US dollar index will weaken again. The Canadian dollar, like its major counterparts, is strengthening against the US dollar. After the decision of the Bank of Canada, the loonie advanced to a 2-week high, and today it continues its victorious march. The USD CAD pair traded 0.17% lower intraday at 1.3165. As for the intraday forecast, it's outlined between 1.3110 and 1.3180. The Bank of Canada on Wednesday raised its key overnight rate by a quarter of a percentage point to 5% and said it could increase rates even further. The regulator noted that the rates are not restrictive enough. The bank raised its growth forecast for this year and pushed back 6 months to mid-2025 on expectations to reach its 2% inflation target. The Board of Governors remains concerned that progress towards the 2% target could stall, jeopardizing the return to the price stability, the Bank of Canada said in a statement. If new information suggests we need to do more, we are prepared to raise our key interest rate even further, but we don't want to do more than we have to, Bank of Canada Governor Tiff Macklem told reporters after the decision was made. The Bank of Canada will adjust future policy decisions to assessment of incoming data and inflation forecast, Macklem said. The Bank of Canada upgraded its annual quarterly GDP forecast for the second quarter to 1.5% from 1% in April. GDP is expected to pick up by to 1.5% in the third quarter. Overall growth in real gross domestic product in 2023 is expected to be 1.8% compared to 1.4% forecast in April. Surprisingly strong demand, higher than expected housing costs, and a more gradual decline in commodity prices, except for food and energy, are fueling inflation, and the Bank of Canada said. The overnight target rate was last set at 5% in March and April 2001. The Canadian dollar strengthened to a 2-week high of 1.3144 against the US dollar after the decision before pulling back. As for oil quotes, they were stable on a Thursday. Brent crude futures traded at $80.04 per barrel, and WTI hovered around the price of $75.76. The crypto market is trading with cautious optimism. Bitcoin is trading at about 30,600.9% up. Popular altcoins are trading mainly higher. The information background is sensitive to auctions of the U.S. Securities and Exchange Commission. Alex Mashinsky, founder and the former CEO of a bankrupt crypto lender Celsius Network, was arrested on a Thursday morning to stand trial in a lawsuit by the U.S. Securities and Exchange Commission. The Commission's lawsuit alleges that Mashinsky and Celsius raised billions of dollars by selling unregistered crypto securities and misled investors about the financial success of the business. The lawsuit adds to a number of concerns for the Celsius network, which was also sued by the New York Attorney General earlier this year. Meanwhile, as a Bitcoin miner sales reach record highs, and Bitcoin mining is getting more complicated. The index, after being adjusted on July 12, reached an all-time high of 53.91 trillion units. This latest adjustment is expected to put additional pressure on the miners who have been selling their generated Bitcoin since June. The intraday forecast for Bitcoin remains the same. The price is still trapped between $30,500 and $30,800, but the token is still trying to go beyond the borders. Coin number 1 could overcome the height of 31,000 or fall below $30,000. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you online tomorrow.